Hey, what's going on, investors? EBS Invest here, back with a brand new video. Today, we're going to be going over a 6-month review video, talking about some new stocks I picked up, as well as performance of my portfolios. I apologize for my absence. I just finished up with school, getting through finals and all of that, dealing with some personal things as well. Excited to make some videos over the summer for the YouTube audience. And I just want to say thank you guys all for 100 subscribers. We hit 100 and now we're at 130. It seems to be that we're growing really fast. So I just want to say thank you guys all for watching. And those who are new, please subscribe. It really helps the channel. So for our agenda today, we're going to go over our review, talking about the performance that we've had over the 6 months. We're going to go over some growth, our IBM review, and then we're going to go into closing. I will go in more in depth, talking about each sector once we get there. So I believe we exceeded expectations so far. We had our portfolio grew year to date, beating the market. We had increasing unrealized gains. Both portfolios performed very well. We had aggressive performance on selective stocks, boosted the bottom line. Some of our stocks, such as Lam Research, Microsoft, Apple, performed very well. Lam Research, one of my favorite stocks, I'm up nearly 50% on. You can see on our broker portfolio, I'm up 15% year to date, beating the market pretty well. Although the performance is not as good as Portfolio 2, which you'll see in a little bit, I'm very proud of this portfolio's performance, and I think I've done a good job diversifying it. That was one of my goals in my last portfolio reviews. I said that I had too much tech in both portfolios, and I decided I want to diversify more. And going on to this slide, you can see we picked up more stocks. So I tried to go for more industrials, financials, and healthcare. We picked up Canadian National Railroad, Charles Schwab, and J&J. So 3 powerful positions to add to my portfolio, and 3 very soundproof companies with good market share. For our Roth IRA or Portfolio 2, we're doing much better, 18.3% return. As you can see, basically from about March, we've really taken off. It helps that the positions are smaller. It's just a simple mix of 6, now 7 positions, and it performs pretty well to my degree. For this Roth IRA, we picked up United Healthcare, so that makes our 7th stock for the portfolio. Our growth for Portfolio 1 from January, we grew from about $3,200 to now about $4,600. About $1,200 to $1,300 of that was contribution, whereas we're up about $300, $400 in the broker portfolio. For the Roth IRA, we grew this a little bit more aggressively. It was about $1,100 January 1st, and now we're at about $1,700. This has about a $200 gain, so the $500 difference was contributions. For our broker portfolio, you can see Schwab and Canadian National and J&J are our new additions, and they add a good diversification to the portfolio. Overall, you can see besides SCHX, T-Rowe, Microsoft, and Google are our top 3 holdings, followed by Starbucks, Qualcomm, and Apple. And you can see the rest of the pie there. For our Roth IRA, the portfolio is much smaller, much more simple, and I designed it to be that way. I want the stocks in this portfolio to be super long-term. I don't plan on selling out of any of these stocks. You can see the market makes up the majority of this portfolio, whereas on this portfolio, the market makes up 8.4%, 4.7%, and 5.4%. Overall, you can see United Healthcare, Berkshire Hathaway, Apple, and Microsoft are the main 4 core positions here. Adding United Healthcare was a decision on my part because I wanted to diversify, like I said, and it seemed to be like a strong healthcare play as well as a good defensive stock. Our IBM holdings dwindled this year. IBM has kind of had a rough start to the year. It started out about $1,800, and now the value is down to $1,700, not a big decrease. I did obtain 8 more shares through my family, so technically the value did increase, but if it was to stay, we are down on IBM year to date. Growth, you can see IBM has trailed the market. It has done well recently in the past few weeks, but in terms, it's been having a tough start to the year. Our blended portfolios, so our first portfolio, the broker, is about 40% of my net worth. My Roth IRA is about 14%. My IBM holdings are about 23%. And my money market fund, which is basically my savings, I transferred all my savings to my money market fund to obtain interest, is about 25%. The money market fund, as it currently stands, has a value of about $2,800, and I'm looking to grow that over the summer. Dividend year-over-year growth has done very well. It has kind of flatlined recently due to low contributions, but I'm working on that over the summer as I have a job. But you can see that we were growing at a pretty high rate, almost skyrocketing, and we have 82% more dividends this year than this time last year. Dividend review, you can see last year we had about $10, maybe $20 per quarter, but now we're averaging about $40 a quarter in dividends, showing that great growth that I've been talking about. Some new goals that I have. Goal 1, continue to beat the market for the rest of the year. Goal 2, continue to grow our portfolio value aggressively by obtaining contributions, making sure that we're growing our portfolio in a safe manner in terms of making sure that all the stocks are balanced well, and making sure that I'm picking high quality stocks if I do add any, and trimming any positions that I seem necessary. Currently at the moment, there are no positions in my mind that seem overvalued that need trimming. I believe all my stocks to be soundproof. And goal number 3, review and flush out portfolios for maximum performance. I've been working on that. I cut a few shares of Rio and Sibanye-Stillwater Limited. I bought those stocks on a whim, and looking at my goals in my portfolio, it doesn't really meet it, but I do think they add good diversification, so I'm going to keep them for now. Otherwise, I'm just going to continue reviewing my portfolio over the next half of the year, making sure my contributions are put in correctly, and adding and beating the market to continue to grow. A letter from myself. As I continue into the future, the market may remain unsteady, but I remain optimistic in my ability to beat the market and perform well. My portfolio seems stronger than ever, hitting all-time gain highs and growing well. Proud of the work I have achieved. Let's head into the rest of 2023 strong. Thank you guys for watching. I hope this gives you a little insight on my portfolio. In summary, my portfolios have grew well besides the IBM shares. I have obtained new stocks, diversifying well, growing my assets, and beating the market. That's all an investor can hope for. Thank you guys for watching this video. I appreciate the support. Please drop a comment below, subscribe, leave a like, and I will be sure to get back to you and help me grow this channel so I can reach more audiences and help more people. This has been EBS Invest. Thanks for watching. Bye.